All right, let's talk commodities now with Dumebi Iyeke, one of the research analysts with Financial Derivatives Company. Hello, Dumebi. Happy
Hi.
holiday.
Happy
Good to have
holidays.
you this
Good
holiday.
morning. Happy
Welcome
holidays
back.
Good
to you
morning.
too. Thank you.
Well, while we are on holiday here, of course, the oil market is still trading. And today, this morning, we saw prices go down despite the optimism in the global demand as announced by OPEC and the IEA. And then we've seen the rise in COVID cases in India. Of course, that is what pushed prices down. So is this a case for worry, particularly for Nigeria?
Looking at the situation in India, if we're looking at Nigeria in correlation with India, there are two major similarities between both countries. We're both emerging markets with huge populations, and we're both colonized by the British. So, but if we look at the similarities between both countries, India, in its sense or in its right, has been able to maintain its economic structure in such a way that it has a lot of economic, it's been able to absorb a lot of shocks that have, hit it so many times, apart from right now, the COVID pandemic that's really struggling with. So looking at the similarities between India and Nigeria, there is that concern that what's happening in India could actually happen in Nigeria. I mean, Bloomberg released a report yesterday saying that 44 countries already have this strain that India is talking about. So we know what happened with the index case of Nigeria. The fear is that could this repeat itself with this new variant that's in India, and do we have what it takes to actually contain this variant? Do we have what it takes to make sure it doesn't spread as much? Do we have the macroeconomic capacity to deal with this? And the truth of the matter is that Nigeria cannot afford a third wave. We can't even afford another lockdown. Why? Macroeconomic fundamentals are not in our favor, and we cannot just, we can't be lax with this, because the variant is, it has proved itself in India to be something that is very, very, very tough and difficult for the Indian economy to handle. How much more us?
Nigeria. Well, next meeting for OPEC is June 1st.
Yes.
Any thoughts on what the possible outcome would be?
I mean, it's still too early to say what the cartel and its allies would do and what direction they would go. But we're having hints from their position right now, and this is because they've come out to say they're sticking with their demand forecast. They're being optimistic, and a major reason why they're saying this is because we're seeing a rebound in economic activities in the Eurozone. We're seeing a rebound in the Chinese economy, and we're also seeing good things happen in the UK and the US. So there is some hope of recovery for oil demand. And if this happens, OPEC, could either leave its current ease in output cuts, which is beneficial to Nigeria, which is, as Nigeria is more sensitive to an increase in oil production, than prices. And if they decide to do that, I mean, it's good news to the markets, good news to Nigeria.
What's the worst case scenario?
The worst case scenario is because of the Indian strain, if that spreads across so many other countries.
That's a major concern
That's
right
a huge,
now.
huge concern, and we see renewed lockdowns, especially from Nigeria's major trading partners, which are in the Eurozone. If we see the US, decide to contain as well, the UK decide to contain as well, that's really bad news for the oil market. We could see a repeat of what happened in Q2 when the pandemic was at its peak, and that's just really bad news for Nigeria.
Now, talking about the development in the U.S., looking at some kind of concerning outcome there. Yesterday, the U.S. Came up with its inflation data, and that sent markets roiling because the inflation has gone higher than, expected. And that is likely to kind of push interest rates.
So the thing is this. The U.S. is a dominant economy, a dominant global economy. Whatever happens in the U.S. could affect a lot, it will affect a lot of economies, especially emerging markets, of which Nigeria is one of. So the U.S. inflation rising, there has been so much debate as to the U.S. inflation climbing, and this is because of the stimulus packages, the infrastructure plan, and all of this pushing inflation beyond the U.S. Fed's target of 2%. The original forecast of 3.6, and the inflation peaked higher than all of this. So there are increased fears of global interest rates rising. Because why? If U.S. inflation increases, the U.S. Fed is under pressure to increase
Well,
interest
the
rates.
Fed has continued to play down on the
Exactly, but
risk.
at this time, when they made that statement, U.S. inflation numbers were not out. And they were confident that, inflation would not, go overboard. We could still contain inflation. They've left interest rates at near zero, about 0 to 0.25%. But with inflation at 4.2, it simply means that there is negative real rate of return on investment. Investors are weary. The markets are weary. The U.S. Fed will be under pressure. They could decide to increase interest rates. And if the U.S. Fed decides to increase interest rates, other CBN, other global central banks could follow suit. And if this happens, we see an increase in global interest rates. And if this happens,
And you see that also
affecting
Nigeria.
Nigeria.
Yes.
Before we even get to that, what we'll likely see is investors pulling out funds from emerging markets like Nigeria into these global economies. And also, that's really bad because there'll be an increase in capital outflows, of which emerging markets need this capital inflows for infrastructure development to be able to shield against the impact of the COVID-19. And then, and another major impact is this. If global interest rates rise, all the economies, especially the emerging markets and countries in Africa that have incurred huge debts, would be facing an increase in debt service costs.
Now, so do you see this as a determinant factor for the MPC? Of course, their meeting is coming up later in the day. This might just be one of the considerations in coming out with their decisions.
I mean, we've seen the MPC play on domestic data rather than happenings all over, apart from the COVID-19 lockdowns, renewed lockdowns globally, and all of that. But the major considerations that we're seeing that the MPC would likely focus on are the data that are going to be released before then. And that is, number one, the GDP numbers that were released May 24, and the April inflation numbers to be released May 17. So their decision on whether to either hike interest rates or maintain status quo again will be dependent on these two factors primarily, and all the other packages and incentives that they have, pushed into the economy, and the impact of all of this, in the economy. So I'm not so sure. We can't categorically say that if the U.S. Fed increase interest and we see global interest rates rise, the CBN, or rather the MPC, will be forced to increase interest rates. I mean, we've seen...
But we've seen our inflation numbers skyrocketing.
Exactly. So definitely there is some pressure to do that. There is heightened pressure to increase interest rates because we need to bridge that gap. But we cannot overrule the fact that the CBN has been using orthodox monetary policy tools to actually increase interest rates. 91-day T-bill rates have remained around 2%, 180 days 2%, but we have been seeing the 364-day T-bill rates increase. It's almost 10%.
For how long will that continue?
How long, yeah.
I mean, it's not a win-win situation, but we can say that something is happening. Something is happening in the interest rate environment. Short-term interbank interest rates are also increasing. So we can say that something is happening in the interest rate environment. We need the anchor rate to move, but we don't know if that's going to happen immediately. Well, we can definitely say that there is pressure to do that. And one significant thing that happened at the last MPC meeting was that of all the voting members, we saw that there was an increase in the number of members that agreed for a rate hike. So if the MPC decides to, either maintain status quo or increase interest rate, whatever decision they decide to make, what we're going to see is that more members would definitely vote for a rate hike. That's a definite factor that we would likely see this MPC.
We'll definitely watch out and see
we just keep our fingers crossed.
Exactly. Fingers crossed there. So let's look at the FX market now. Naira remained flat at 485 at the parallel market. What is your outlook on the Forex market, especially with external reserves still declining at this point?
Two reasons why we are saying we're seeing the external reserves decline. Two reasons that we can lay our fingers on is that, number one, the CBN is clearing its Forex demand backlog to foreign portfolio investors. The backlog is about $2 billion. So we're seeing the fact that CBN has resumed, it's clearing of that particular backlog. So that's, affecting the external reserves. And also we're seeing that the CBN is trying to keep the naira stable, at least to a certain extent. So we're seeing all of that happen. And the truth of the matter is that Forex volatility is likely to continue, and this is because the economy is rebounding. Manufacturers are, the activities are increasing. Students are resuming back to school. There's so many things that are happening in the economy, and there is heightened demand for Forex. So not until there is ample supply of Forex, we will continue to see the currency, we'll continue to see heightened Forex pressures in the market.
All right, the Ramadan fast, I guess, has come to an end, and of course, our Muslim friends are celebrating today. So how do you think the domestic commodities market prices is going to move going forward?
Like we saw when the fasting started, there was a significant increase in commodity prices. Even though the fasting was not the main reason why prices were increasing, but we saw its impact on commodity prices. So as the fast is coming to an end, we're expecting that prices could ease, temporarily. And that's because we can't overrule the effect of insecurity on food production. And food supply across the country. We can't overrule supply chain disruptions. We can't overrule the exchange rate pass-through effect to commodity prices. We can't overrule Forex restrictions on imported commodities, all of this having their impact on domestic commodity prices. But we're expecting that as the fasting, has come to an end, commodity prices could ease, temporarily.
All right, what's your outlook for Nigeria's inflation levels in the near term?
In the near term. Near term, we're looking at the April inflation numbers to be released April 17. We're forecasting a further spike in inflation numbers to 18.77%. That's for headline inflation. For food inflation, we're looking at 24%. And that's just more bad news to the Nigerian consumer, because my disposable income is going to significantly decline, and this is because our income is not increasing. So, people are going to be under pressure. Consumers would likely focus more of their spending on staples and just their, they would rather stay away from luxury spending and just focus on, on the immediate needs, necessities. With the increase, with the Forex pressures, and we could see manufacturers also, move their, pass the burden of all of this to the consumer. So definitely the Nigerian consumer is not exactly going to find this funny in the near term,
Okay, we'll keep our fingers crossed, and we'll look forward to those numbers.
Yes.
That's next week?
Yes.
Monday, 17th?
Yes.
For the inflation numbers, and of course the upper Monday, 24th,
GDP numbers,
for the GDP numbers.
Hope for a miracle.
Thank you very much, Dumebi. We do
Thank you so
appreciate
much.
your time.
Thank you.
Enjoy the rest of the holiday. I'm
Thank
sure
you.
you're
You
back
too.
to work tomorrow.